Major artificial intelligence stocks report earnings this week that is going to have an explosive effect on the entire stock market. These stocks are Google, better known as Alphabet, Microsoft, and Meta. They're three of the seven magnificent stocks, which are Amazon, Alphabet, Apple, Microsoft, Meta, NVIDIA, and Tesla. Also, we have a significant factor with the QQQ, which is the 100 largest companies on the NASDAQ. The Magnificent Seven are weighted heavily in the QQQ. The Magnificent Seven take up over 50% of the QQQ. So they're going to rebalance the QQQ so that the Magnificent Seven take a somewhat lower percentage because they're worried about the downside of one of these major companies failing on earnings and it taking down the QQQ and the entire stock market, which can easily be done, especially in the case of Microsoft and Apple. Apple is the largest stock in the stock market. It's almost $3 trillion, and Microsoft is a relatively close second. So these two stocks are a big deal, and they're going to rebalance it on Monday, the 24th of July. On Tuesday, we have two giants reporting, Google, better known as Alphabet, and Microsoft. Both of these are significant in the artificial intelligence realm. Google, of course, they are working on Bard, and they are behind Microsoft, but we know that Google's going to catch up, and they're going to be magnificent in the future. And they haven't gone up as much as the other six, and that's part of the reason why, is because their Bard isn't as caught up with artificial intelligence as Microsoft's ChatGPT. ChatGPT is like a revolution, and it's very interesting. I've used it myself. I've asked it what would be a good portfolio for $2 million, and it came back with some very interesting answers. One frustration with it is it doesn't save the answers. You know, sometimes it'll give an excellent answer and I want to go back to that answer and it says, oh, forget that. I don't save any of this. So that's kind of a frustration with it right now. But Google and Microsoft report on Tuesday, the 25th of July. That will be a big deal. And that's just a day before they increase the interest rate by 0.25, a quarter of a point, and it's like a 99% probability that they're going to increase it 0.25 on Wednesday, July 26th. And what will matter is to watch the interview, because I think the stock market will go down somewhat right after they announce that they're increasing it. But the stock market has already priced this in. So it all depends on how hawkish or dovish Jerome Powell is in the interview. My prediction is that he's going to try to be neutral, somewhat neutral, and say, oh, we're going to be data dependent. Okay, and the stock market is going to interpret that as being dovish because all the data indicates they should not raise it any further. The only reason they are raising it is to give them insurance that they've done enough. And secondly, because the stock market has been going up so massively that they need to do this to bring the stock market down. The stock market going up rapidly as it has. It's completely erased the bear market of 2022. So this is phenomenal that it's gone up this much, and it was very unexpected. So they're going to raise it a quarter of a point, but they're going to be dovish, or Wall Street is probably going to interpret it as dovish. So basically, I see it as buying QQQ You can buy QQQ, or I buy TQQQ. TQQQ is the triple leveraged on the QQQ, so it's riskier, but it's also I've gotten used to it, and this is the way I make my money, is on the triple leveraged funds, because they have the most variation during the day, and that's the way I make money in the stock market. So I'm going to probably buy TQQQ when they announce the increase in the interest rate. And then I think it's going to go up during the interview, because I think he's going to be dovish. Not because he wants to be, but because Wall Street will interpret it as being dovish. Part of the reason Microsoft is going to do well, I think, on Tuesday is because they charge $30 per worker at businesses to add artificial intelligence to their Office 365 product. So $30 for every worker, and that's per month. And businesses that rely a lot on artificial intelligence will probably go on it, and it should increase Microsoft's revenue massively. And Google, I don't think, is expected to do as well as Microsoft, but it's already kind of priced in. They already expect that it won't do as well. But Google's revenue for 2023 is expected to grow by 23% over the previous year. So I think Microsoft should have outstanding earnings, and Google will have okay earnings or mildly positive earnings, and that'll be enough to send the market up for Tuesday. And Wednesday should be complete rock and roll. It should be an exciting day, because that's when Meta reports earnings, and that's when they raise the interest rate by 1/4 point on the 26th. So I think Meta has been such a successful stock this year. Zuckerberg is being called the comeback kid of the year because of the dramatic turnaround at Meta, which includes Facebook, Instagram, WhatsApp, and Oculus, their virtual reality site. But they have daily users of over 2 billion people. Wow. Their average revenue per user is $9.62. They're expected to report in the second quarter that they're going to have about $30 billion worth of revenue. So it's a money-making machine. And Meta and Google, because Google is reliant on advertising also, as Meta is, during a political year, the run-up to the presidential election, in 2023 and 2024, Meta and Google are going to benefit greatly from all the political advertising. So I think Microsoft and Meta are going to be the blockbusters, and I think Google will do okay. I think Tuesday and Wednesday, I'm projecting. I may hold. I'm a day trader for now because I don't trust the market in many ways, but I might hold the stock over Tuesday night, because I think Wednesday is just going to be a continuation of the same, with Powell being dovish and then Meta having wonderful earnings, which I expect. Now, if Microsoft or Meta have mediocre earnings, that's going to change my thoughts a lot. One thing you want to keep your eye on is the value of the United States dollar. That affects stocks a lot. And right now, the effect is if the US dollar goes down, the stocks are going up, especially the technology stocks. Now, it affects bank stocks differently. The bank stocks, they benefit from interest rates going up. So as interest rates increase, the banks do better, but technology stocks do worse. So they have an inverse relationship. And part of what was difficult last week is the interest rates went up. The 2-year bond yield is around 4.77%, and even the 10-year yield increased and the 30-year yield increased. The 10-year went up to 3.75%, and the 30-year went up to 3.84%. But I think by the time Powell announces, it'll be factored in to stocks if it isn't already. And I think we're looking to the future, and they're trying to project when he's going to, I think they're convinced he's going to stop increasing, but they're trying to project when he will start cutting rates. I don't think that's in the cards until 2024, like February or March of 2024, just because he wants to make sure that inflation is under control. But you want to watch the value of the dollar. The value of the dollar has decreased by about 5% in the last year, and that is what part of the reason why technology stocks have gone up. The dollar really affects things because foreign countries, they can buy our products at a cheaper price. Companies, especially like Apple and Tesla, they sell many more items to foreign countries when the dollar is weak. And also, they benefit from the conversion factor. When they convert the foreign currency to US dollars, if the United States dollar is weak, they get many more dollars from that currency. They benefit from the currency exchange when the dollar is weak. We want to keep our eyes, especially if you're a short-term trader like me, on what the dollar is doing. And for right now, it going down is a good thing, because it increases United States exports, and it increases United States companies' income in US dollars. Please smash the like button if you feel like I've earned it, because it really helps the channel. And I think we have good times coming, but it all depends on Microsoft and Meta. A little bit on Google, but mainly Microsoft, and secondly, Meta. So if we have those two events occur, along with Powell not being hawkish, it's a lot of things to have to go right for the market to go up. But I think it's likely and probable, and that's kind of the way I'm playing my cards. Thank you.